Withum is our featured supplier guest today on the topic heading off surprise expenses. And Chuck Pappas, our VP of Operations, will come on in just a moment to introduce our guest presenter. We'll have some polls, post-session survey, so we're all set to go. Chuck, let's have you open your webcam, and I'll turn the floor over to you.
Well, thank you, David. Appreciate that. Well, welcome, everybody. Thanks for registering for another of our profit improvement webinars. We're glad you're joining us today. This afternoon, we're pleased to present Jen Moylan, lead consultant at Withum. Today, Jen will help you learn how to head off surprise expenses. We'll bring Jen on in just a minute here, but we have a slide up right now. So if you're interested in getting a copy of this deck, just scan the QR code and we'll make sure you get this off to you right away. You know, we started this webinar series a little over 3 years ago, and in the course of these webinars, we presented a wide variety of category topics from audit recovery, shipping costs, DMS systems, shop supplies, hidden opportunities that are in your service department, and our popular buy-sell webinars, as well as some revenue-producing opportunities, all intended to reduce your expenses and improve your possibility. With that, I will turn it over to Jen. Jen, take it away.
Thanks, Chuck. Thank you, everybody, for joining me today. I'm hopefully going to give you at least 1 or 2 new ideas and ways to look at things and how you've been doing them. Hopefully, most of what I'm going to tell you is stuff that you already know, but I always personally find if I get one good takeaway from a webinar, it's well worth the 30 minutes or hour of my time to attend. I am going to hopefully you'll have some questions for me. Please save them for the end. There will be a couple of times that I'll interact with you throughout with some polling questions because I do prefer to be live in person and see everybody's reactions and see when people have questions. So this is how I'll interact with you during the webinar, and then we'll have questions at the end. So let's get into it. I like to talk about everything that Chuck already mentioned that you've done, including, of course, expense savings, but also new revenue opportunities, processes, compliance issues. Buy-sells are near and dear to me as well. So the first thing I want to know about you guys is, who are you? What are you doing? So we have a polling question where I'll just ask you to chime in with what your general area is. So are you in management? Are you just part of the team? Well, not just part of the team. Are you the ones that actually are going to be doing this work? Or are you the dealer principal who's going to go back and share this, hopefully, with your team? I see we have a lot of management here, so I'm hoping I have a lot of controllers and office managers. Mostly dealer management. So I'm expecting I have a lot of controllers and maybe some general managers here with us. So we're going to cover, I don't want to give away too much early on, but some basic ways of actual expenses and ways that you can recoup some expenses or avoid some expenses. Withum, just for a little bit of background about who we are, if you haven't heard from us, we're a pretty big practice in the automotive industry and in accounting in general, and we handle anything and everything to do with the automotive sector as far as accounting goes. So we're going to start off with a question that people ask me all the time. First question, of course, is why are my expenses so high? The second one is, why does it vary month to month? Why is my employee benefits expense $50,000 this month, but last month it was only $30,000 and I have less employees on the plan? So we'll have some different reasons why that might be. It might be that the office can't keep up with cleaning schedules and fixing problems and finding things that need to be written off or put to correct accounts. They might have missed some postings, so they're doubling down one month. They might have duplicated postings, so they're going to get a credit the next month. And sometimes you just have large irregular purchases that hit you all at once, and there's nothing you can really do about those, right? So when are you looking at your monthly expenses? Are you looking at them every week and tracking and monitoring? I know I have some department managers who like to review their policy every single week, look at advertising monthly. Are we on track with what we expect to be? Some of them don't discuss expenses at all until we sit down for a manager's meeting every month or every quarter. I'm seeing responses coming in that mostly is before you close the month. That's the best time, although I have seen some surprisingly large groups that don't discuss it at all until the month's been closed already. And then it's kind of like closing the door after the horse got out of the barn, isn't it? All right, I think I see enough responses there to feel confident that you're looking at it before you close. Great. So here's one thing that I like to do to help track it on an easily viewed basis. There's certain expenses hit every single month and they're big. If anybody's ever had to do that, I call it a walk of shame, when you have to walk from the accounting office down to the general manager's office, or worse yet, the dealer's office, and say, we forgot to post the floor plan interest expense last month. So now I have to post it twice for this month to get it caught up. So if we keep a list of the really big key things and know that it's in there, that's a little bit of a pressure valve to avoid that kind of a situation. It also gets us an opportunity to be able to see if there's any wild swings happening. Like if you look at line 8 of the spreadsheet, the Blue Cross healthcare bill seems to have gone up considerably in June. You might want to take a quick look at that really fast to make sure nothing else got posted to that expense account in error in advance of month end. This is a sheet that I love to do for my clients, where I'll just take the expense analysis page of the financial statement and line by line list each one of those expense accounts and track it every month, what it is for the entire dealership. I don't get granular about parts versus new cars and all that. Just give me the total overall expense for each account category each month. And then I'll build that out in the Excel spreadsheet to show me what my year-to-date average is, what my month-over-month variance is, what my this month versus the year-to-date average variance is. Sometimes I'll even look back at previous years, although the last few years have been a little wild to compare year versus year. But this will tell me right away, again, hone in on where my problems are. If I can see vehicle expenses pretty steady October, November, I know it was really high in September because we had a huge month. So, okay, I'm not going to worry about that one. It's pretty much within line. But my other supplies almost doubled. Why? I'm going to go look at that right away. My outside services is trending down. Did we cut a vendor out, or have we been applying an expense to a different account? What's changed? If you don't know immediately what that $11,000 difference is, well, let's go figure it out before we close the month. Contracts are an important thing to keep an eye on too. So we know month to month is fine, but some of your contracts can have serious implications if we don't revisit them before they automatically renew. So I like to keep this on my desktop. Handy, I can look at it any day I want. It's right there. What contracts are going to automatically renew? How much notice do I have to give before they renew? And what kind of cost is it? And have any kind of notes in there if there's anything I want to think about, keep in mind about these vendors. Let's look at some actual contracts to see why this might be pretty important, although I'm sure you already know. Typical contract is going to say if you don't do anything otherwise, it's going to roll over. Maybe it'll go to month, maybe it'll renew, like in this example, for a consecutive year. It's a 5-year contract. So, all right, that's kind of normal and fair. But you have to watch for some like this example, where if you don't give them any otherwise indication, this 5-year contract is automatically going to roll into another 5-year contract. And you probably don't want to just be automatically roped into the same vendor without any more negotiation on price, on quality of service, anything else that's going on there with them. So this happens to be a uniform company for a client of mine. Rate increases, how are they addressed in the contract? Can they arbitrarily add fees that never go away? I remember, I want to say it's at least 5 years ago, it might be even more than that, where fuel prices got incredibly high. I live in New Jersey, which is a pretty cheap state for gas. And gas here was over $6 a gallon. Every vendor started tacking on fees for fuel surcharges if they were making any kind of deliveries to you. Do you think they've all gone away now that gas is below $3 a gallon here in New Jersey? No, most vendors never took it away. Now, auto dealers are known for also having fees on there too. So that's part of the game. I guess everybody tries to recoup whatever their highest expenses are any way they can. That doesn't mean you can't question it and you can't argue about it. So we want to make sure that anything that they're tacking on does make sense, but read in the contract if there's any negotiation available in that. Know before you sign, of course. Let's talk about some of your biggest expenses. So these are some areas that we see a lot of weird things pop up from time to time, right? So what do you think are your biggest costs in deliveries? Typically is detailing. And your vehicle expense is going to be gas. Now, many manufacturers reimburse you for gas, so you just make sure that wherever that credit for your fuel reimbursement is going is where you're expensing the actual bill from the gas station when you go fill up the cars. This way, they'll offset against each other. Detailing, I see a lot of dealers pack their cars, new and used, for detailing expense to recoup that and apply that expense to the actual cost of goods sold. So we're not just having an expense for no income related to it. That can be something you might want to look into. Some dealers I know who don't get gas recouped, that's part of the whole package, would be detailing and gas put together into an actual flat $125 fee that gets applied to every single car, depending on what their costs are for detailing. Other supplies, the typical biggest expense, they're shop supplies. And it's been a trend in years now that most dealerships do charge a fee for customer pay repair orders to recoup some of those shop supplies. But some dealerships don't. You might want to reconsider that as shop supplies continue to grow in expense. I have many clients who actually profit a few dollars off of the shop supplies every month. Miscellaneous is a trick question for me because to me, if you know me well, I will always say that miscellaneous expenses, that's a dirty word. Every single expense you have should have a category that it can go to and be tracked and monitored. So when we throw something into miscellaneous, sometimes we have no choice. We really don't know where it's supposed to go. The person to ask isn't in today. I'll get back to it. I'll come back to it later. Well, we never do. And then somebody else in the office sees, well, Jen's putting stuff to miscellaneous. I don't know what this is. I'm just going to throw it into miscellaneous too. Next thing you know, you've got $10,000 in monthly expense going to miscellaneous because it's the path of least resistance. I don't have to stop and ask somebody. I don't want to appear foolish and not smart enough to know what this should go to. I'll just put it into miscellaneous. Nobody ever looks at it. Start looking at it. Sometimes it's not an actual expense that's costing you money. It's lost income that's costing you money. Incentives can be a huge problem to your bottom line if they're being set up inappropriately on deals. I had a client years ago, back when there was the stair-step programs where all the rage at all the manufacturers. We had a program on a very hot-selling sedan. Well, the model had sedans and coupes. The stair-step incentive was only on the two-door coupes. But the sales department was building that into every single one of this model, regardless of whether it qualified or not. It was a many-month program. And when the months came to an end and we were looking for a very large six-figure balance to be paid by the manufacturer, and I got about $20,000 instead, and I questioned, well, what happened here? I was told, don't worry, we're going to get the money. I've been on the phone with the rep. It's fine. It's fine. It never came through. I finally pulled up the incentive program rules, and lo and behold, they had accrued money for this incentive that didn't apply. It didn't exist. We had to write off a lot of money for these cars that were incorrectly set up as having an incentive payment available to them. Similarly, we set up rebates from customers promising that they're going to come in with their proof of college grad or their proof of military service, whatever those special programs are that the customer has to provide us with some documentation to qualify, and they failed to come through with it. And who's left holding the bag? Good luck chasing the customer back to get that $500 rebate when they can't prove to you that they did recently graduate college. So have a program in place to make sure that this doesn't get put into the deal unless we have the documentation we need and that the appropriate vehicle is qualified for this incentive or for this customer rebate. Share the results of what's outstanding on the rebate schedule with the sales manager, the general manager, and the dealer. Track and see, is there a constant problem with a certain car, with a certain sales manager, somebody who's setting things up that they shouldn't be? What are we doing about these? Because it's terrible to have to write off so much money that you should have collected or should have never set up in the first place. Payroll accruals is another thing. One of my constant themes is we want to show an expense the time that we actually incur it, right? So when we have our month-end commissions, we have a huge month. Let's say it's a really big month for commissions, it's $100,000. Of course, we want to set those commissions up in this same month. September was huge, twice as big as normal expenses for commissions. We want to put those into September where it all relates. Even though we're going to actually pay them in October, we don't want to show that expense in October because what if October isn't such a good month? Oh, those high expenses are going to really kill the month, right? So we want to do that for all of our payroll-related expenses. With your calendar days when payroll lands on a Friday, but it's mostly last month's activity, we want to push that over into the correct month and accrue for this expense in the actual month it's due. Same thing for vacation time. Let's accrue for it. If we know we're going to spend $60,000 a year on paid time off, let's expense $5,000 every month. Because in June, July, and August, when your expense is $20,000, well, it wouldn't be that high, but when you have very high expenses then for everybody taking vacation and very little vacation being used in the wintertime months, we can even it out and make it be a smoother, consistent expense and not be subject to highs and lows. Year-end bonuses, another thing. If you know you're going to be paying it out, set a little money aside every month so at year-end it doesn't destroy December. Benefits, when you have new hires that are going to go on, health insurance for a family can cost $2,500, $3,000 a month. And it might take a month before the health insurer actually adds them to your bill. If you know your new employee is going to be starting their health coverage October 1st, go ahead and accrue that expense October 1st. So in November, if they don't get picked up by your healthcare coverage until November, 2 months will double down on your expense for that month. Work in process is another item that gets lost in the sauce sometimes. It ends up being an expense. You have to take a close look at these kind of things because things can be happening and nobody's looking at it if it's not scheduled. And most dealerships don't schedule your work in process. We think of work in process like parts inventory, right? You're going to buy something and you're going to sell it on a parts ticket or a repair order. And whatever you bought it for is what you have to at least be selling it for. I had a client who had not updated their technician pay rates in the service side of their DMS in 15 years. So payroll is paying a technician who's been there all that time $35 an hour for his time. But service had never changed in their side the cost of his repairs. So for every hour that we were paying him $35, they were only costing out $9. So just like your parts inventory can grow wildly if they're not costing out parts correctly being sold, so can service. And at some point, you're going to have to write off that lost cause. So it's a better thing to be tracking that regularly. Make sure that service updates on their end, any payroll changes, the same time that payroll goes into effect, the new changes. Wrong techs get flagged all the time. We're human. We're going to reverse numbers or think that Joe did it, but actually it was Lou did this job. The techs always remember when payroll rolls around, hey, you owe me 10 hours for this job. So we have to fix it not only in payroll, but also how the ROs got costed out to make sure that we're using the correct costs and relieving that work in process balance. You can have a few other things on here that can affect your work in process, such as spiffs. Most dealerships will give a bump, we always call it, okay? If you get over 40 hours, you're going to get another $1 an hour. If you get over 50 hours, you're going to get another $3 an hour, something like that. If you aren't selling those additional bonus payments on the repair order to relieve that inventory, you can't pay that into inventory. That should be going to service pay, other bonuses, whatever some other expense account. Just expense it right away or make an adjustment back to your cost of sales. But don't post those directly to work in process, especially if they're just bonuses that aren't related to any particular repair order. Some shops do spins, dice pulls, card pulls, bonuses based on how many jobs they complete or hours that they've earned. That definitely can't go to work in process. That has to go to a bonus. And hourly technicians also, there's always a question. We want to make sure that their flag time, because they are getting flagged on repair orders, but their unapplied time shouldn't be going to work in process because we're never going to sell that time, right? That was time that they were just hanging around, pushing a broom, apprenticing, learning something new, and we can't actually sell their time. So that's going to be an expense. How do you feel about accruals? Talk to me a little bit here. Do you use them regularly to share your expenses, spread them out? Some don't use accruals at all because they've had a bad experience. I'm seeing a pretty even mix between using them constantly and not really using them at all. Well, I hope I'm going to educate a little bit there and help you see a way that you can defer or smooth your expenses through the use of accruals. I see a little bit more than half is using them, so that's really good news. So timing is everything, right? Let's think about credit card fees. That can be $30,000 a month easily in a dealership, right? Now, I know a lot of dealers are now passing that fee on to the customers. So if you are one of those and you're no longer having to swallow that $30,000 a month expense, great. But for those of you who still do, and I know you're out there, let's think about how this happens. That's a fee that's incurred for what your actual usage is, but so it can't be billed until that period is over. So I've never seen any other way but it hitting your banking account on about the second or third of the month. So let's say for your September business, it's going to come out of your bank on the 3rd of October. And a lot of dealerships will post that fee coming out of the bank as an expense to your credit card fees in that month that is charged in October. But to go back to saying September was a phenomenal month, we've shattered every record, more sales than ever, and then October maybe has a little bit of a realignment and it's not going to be quite so good. Do we want to have that huge expense related to September's huge phenomenal profits showing up in a lesser month? No, we really want to get that into September. So most dealerships have not closed the books on September on October 2nd or 3rd. So we can go ahead and post that and as a September expense and just have an open item on your bank reconciliation that you've posted something to the general ledger that hasn't cleared the bank yet. It'll clear in October and is fine, and your expenses are in line with what your income was. Detailing is another thing that'll fall in the same line, although not nearly as much money. You're going to get billed from your detailer on Fridays. You're going to have a mix of September and October deliveries on that bill, right? How about we split that out into 2 postings and we post the September charges into the month of September, and then October will go into October. So we're keeping in line that we had to detail these cars for delivery in the month that they were delivered and that income was earned. Benefits I already mentioned. Payroll odd days. Let's talk about that one a little bit. So it's more of a visual here. I'm going to assume that you're having a weekly payroll. And I'm going to assume that those checks go out on Friday. Your payroll is input on Wednesday. And your payroll period will run from Thursday to Tuesday then, right? So if we look at September's calendar, when you have your last week of September's payroll, that's not going to actually get paid out until October. And many offices will post that payroll then the day that it comes out of the bank. The cash comes out of your bank on Friday the 4th or maybe Thursday the 3rd. We're going to post all those payroll expenses into October then. But again, I always use that contrast of 1 month being huge with higher payroll, higher commissions, higher everything, and a lesser follow-up month. So now you're going to have all these extra high expenses in the lesser month. It's really going to pull down that lesser month. If we can accrue, and I keep it simple for payroll. Say if we base our payroll on 5 days, 4 of them are in September, take 80%, post 80% of that payroll total as a September amount. So instead of crediting cash in bank payroll, you're going to credit payroll accrual. And then in October, just reverse that entire journal entry and then post your whole payroll like you normally do into October for the full amounts. So then you'll start off with credit balances in October when you reverse that entry, and then when you post the whole payroll again, that'll wipe it out and you'll just be left with what's really in October. This is where it can get scary and why I did see some saying, no, we had a bad experience, we don't like accruals, because you have to remember to reverse out what you've already done so you don't double down on it. So my recommendation when you do that is anything that's accrued goes on a schedule. Payroll goes onto a schedule. You should have a prepaid and accrual schedule set up, but anytime you're going to any kind of account like that, make sure it's scheduled. And if there's any schedule that you look at, if you're so pressed for time before you close the month, you can only look at one schedule. Look at that accrual schedule and make sure that there's nothing hanging out there that should have been reversed. One question that comes up an awful lot in offices is when an internal comes up for a car that's been delivered. Do we code this as policy expense, or do we code it to cost of sale? Cost of sale affects the gross profit. And if the delivery occurred in the same month that this RO came through, we just posted the deal already. Don't reopen the deal. You can just go to cost of sale, and it'll still affect this month's current gross profits. But then we get into that gray area that it came through a couple days after the deal was posted, but now we're into a new month. So we really don't want to affect cost of sales for October for a September deal, right? Because we want our grosses to be true for what happened in this calendar month. So maybe you go to policy expense with it, but that's really not policy. Policy is saying, hey, we made a decision to keep the customer happy. It wasn't part of the deal. We weren't required to do it, but we wanted to go ahead and replace this issue that was wrong with the car to keep them happy. So I recommend setting up a sub-account on cost of sale. So if your cost of sale account for this model is 456, make a 456A for prior month cost of sale. Point that to policy so that it doesn't flow into your sales gross profits for the month. But we can segregate it when you look overall at what was policy, giveaways for customer satisfaction, and what were issues that were cost of sales from prior month deals. And another thing to note while we're on the subject briefly is there a clear definition about chargebacks to salespeople and F&I? Are there clear rules that anybody who touches these things knows that there is a minimum amount that we would charge back, that they consistently charge them back every single time? So you can recoup on some of these policy items. If the salesperson offered something that wasn't set up in the deal on a WIO, you can track and see just exactly what's happening here. So sometimes on the other side, we buy something first and we're not going to use it for many months. If you're expensing it straight out, well, you're getting it over with, kind of ripping the Band-Aid off. But and if you have a whole lot of big expensive printers in your dealership, you probably have somebody who every now and then walks around and takes inventory and puts together one giant order for toner. The service department will order one giant order of tech gloves in 4 different sizes, with and without latex. These are really expensive, and they're going to last you for many months. So if you're paying out a ton of money for promotional T-shirts and baseball hats, but they're going to last you for 6 months, why not put that to prepaid and chip away at it over, I'd be conservative and say 4 months, because you don't want to still be writing off the expense for one order and you have to order another now. So these kind of things, you can smooth it out a little bit more. Instead of having quarterly OEM fees for using their website or using their training programs on your manufacturer's website, they charge you quarterly to participate in different incentive programs. Spread that out over the length of that benefit that you're receiving from that asset. Now be careful with this. You can't overextend it. You can't extend it into the next year for tax purposes. That might cause you problems. But if you can condense it all into 1 year's time, then spread it out a little bit, because you'll be using those technician gloves for many months, not just the month that you purchased them. Same thing for your holiday party. Accrue those expenses rather than throw them all into December. Or worse yet, don't carry them over and expense them into the new year. You need to get that into the year that the expenses were incurred. Parts inventory, if you have a large parts inventory and it can cost you $20,000 a year, spread that out over the course of the year. You know you're going to have it. So everybody knows to go through schedules, clean them up. We look at our expenses and make sure that there's not any mistakes in there. Is anybody actually really looking at the trial balance every month too? A quick glance to see, are there debits when there should be a credit? Credits when we expect to see a debit? What's making that up? Has something been cross-posted to the wrong account and it's an easy fix? Or like that work in process. Do you have a 6-figure balance in work in process when your service reports say it's about $20,000? Take a quick look at it for weird numbers that pop up. Inactive accounts suddenly having activity. It's a good way to find some mistakes before it's further down the line and now it's a problem to fix it. What are you doing about your warranty, parts, and labor increases? Who does them? Is that the service manager? Does that get pushed to accounting to find 100 sequential ROs? Are you outsourcing that? I'm happy for my accounting staff. I see somebody's doing them for the accounting staff. Oh, that's a lot of work. A lot of work to do for service and parts managers also, because your main focus should be on running your department, not trying to find the best 100 sequential ROs and filling out the forms and sending the copies. Outsourcing to a third party is a great idea that pays for itself, usually in less than 1 month. So I see that we're pretty much evenly split between all three areas. Thank you for sharing that with me. I would like to say that while it's not an expense in applying for a warranty rate increase, it's costing you money if you don't. If I have any New York dealers on the call today, you should know that there's been a huge change in how you can go about applying for warranty, labor rate, and parts increases. So definitely, if you're not in the loop on that, let me know and I can send you some articles about it. Very advantageous now to New York dealers. These slides, I'm not going to go through them line by line, but there's some important points on here. So take these away with you if you do them yourself, for things to be aware of when you're applying for these increases and what they're allowed to do and how you can work your sequential ROs to your benefit to maximize your increase. We definitely recommend outsourcing it to a professional who does this day in and day out. They know the ins and outs of the individual manufacturers, what they want to see, what they're going to count against you. Your service director might be phenomenal at what they do, but this is an extra add-on that just takes away from their time in doing the things that you really hire them to do. Most of your increases will pay for an outsource in 3 weeks, if not less. I have one last topic that I always like to talk about. Floor plan. Nobody likes to talk about floor plan anymore because it's a huge expense. Used to be you would be making money off of your floor plan assistance coming from the OEMs. Now that's sadly over. I don't really see that happening anyplace else anymore. So one thing that did go down is your CMA. Most dealers were stuffing extra money into the cash management account of their floor plan. But when inventory drops, your cash management balance is tied to how much you actually have in floor plan debt. So as you had less cars on the floor plan, your lender was telling you couldn't have as much money in the savings account either. Now I found many clients that as inventory has gone back up to normal levels, they have a big available pit there in the CMA. They can be putting more cash back in there and earning that interest that they're paying out against. High rates take advantage of that. And then sometimes in the office, it's just a set rule. If the trade-in applies by mileage and by age, we add it to the floor plan, get that cash in. But when you're paying so much in floor plan interest expense, is it really necessary to floor every single car? I have one client who every new car gets paid off immediately. They're doing very well. They have a lot of cash, put it to use for them, pay off the floor plan, and save that interest expense entirely. Now, before you do that, you want to make sure you have adequate coverage, of course, for those cars, because part of the benefit of floor plan is they will cover your cars for any damage or theft. So you will have coverage for non-floored units on your garage liability policy, but make sure there's not a limit. It might only be $200,000, or you might have to itemize and actually pay more than you would pay to have the cars on floor plan. So I have some clients who will floor plan every single used car for $5,000, assuming, of course, the car is worth that much, just so that they will also then get the benefit of the cheaper floor plan coverage for their damaged and stolen units. So I'm going to take a couple more minutes just to talk about Withum, and if there are any questions that I can answer for you on any of these areas. We handle anything that a controller would do. We handle anything, of course, tax and audit related, but we get involved in buy sells and litigation, fraud investigations, anything specially accounting and auto dealer we can help you with. So please feel free to reach out to me and let me know if there's any questions that you have about any of our services or anything that I've talked about today. Of course, I'd be more than happy to let you know. what we can do for you, or answer any questions that you have that you think about after the fact, because of course we're heading into our question and answer session right now. Do we have any questions yet?
Okay, thank you, Jen. Everyone, there's a Q&A button at the bottom of your screen. You can type something there, and we'll cover as many as we can during the remaining time. Just a moment, let me check. Here's one. Is there a way to make sure accruals are being posted correctly? I've had problems with things being booked twice.
Yeah, that's where having that schedule item comes in handy. And I can understand the pain of having an accrual set up that sounds really great to have it, and then it gets forgotten to be reversed out. I had a client that literally printed money every month. They very successful Honda dealership. A typical month, they would sell 800 new retails. Really strong store. One month, the office manager forgot to reverse a commission accrual. Now, when you're selling that many cars, your commissions are pretty significant. I walked into the dealership. The general manager was morose, for lack of a better word. I said, "What's wrong?" He says, "We lost money this month for the first time ever. Nobody could figure out what it was. It's because the controller forgot to reverse out her accruals that month." So I could understand after that, they wanted nothing to do with accruals, prepaids. Everything is as it comes through, and that's the end of the story. But if you segregate those onto their own schedule and you see what's out there and you look at it before you go any place with month end, preferably maybe once a week, just to make sure if you have some prepaids that should be coming off on a standard entry and an accrual that needs to be reversed and repost. That's my mantra: reverse and repost. Look and make sure they're gone. It will help smooth out your expenses, and it will put expenses into the appropriate month so that your income matches your expense. Anything else, Chuck?
Yeah, here's another one. What's the difference between prepaid and accruals?
Well, our prepaids are when we've paid for something up front, but we're going to receive benefit from them for many months to come. Many months can just be 2 months. But if it's a big enough expense, let's say you do a mailer campaign, you have to pay that company up front, say $10,000, when they're going to be sending out emails and mail pieces over the next 2 months, and you're going to see benefit of that. Maybe everything goes out next month, but you're going to see customers still coming in on that 2 months down the road. You might want to share that expense over the next 2 months then, when you're actually going to get benefit of it. You're writing the check today, that mailer is not going to go out until October. So if you put it into the expense for September, there's no value for September. It's just bringing down your profits. Align that expense with when it was actually going to benefit you for whatever it's worth. And likewise, accrual, the other way around. We anticipate having a big bill coming in the future, but is benefiting us all year long or for a few months leading up to it. Let's prepare for that by setting aside some money in each month that is going to be affecting, so that when the big bill does come in, it's not a giant hit to the bottom line in 1 month.
Thanks,
Anything
Jen.
else?
Yeah, here is, well, just before I mention this latest one here, everyone, there's a Q&A button. Go ahead and click on that, and you can type a question in directly to Jen. All right, here's one. We just purchased 5 new laptops at $1,000 each, with the total invoice roughly $5,000. Can we expense them, or do they have to go to fixed assets?
In a case like that, it could go either way. Sometimes we want to capitalize and avoid showing the expense. So if they're all coming in together as part of one large project, we revamped our service department and we got every advisor a brand new PC, we can capitalize that and avoid expensing it now. But sometimes we want to show that expense now, depending on commission structures. Maybe somebody's going to get paid commission on the bottom line, and you want them to participate in the expense of upgrading those PCs for all the service advisors. So since they are broken out separately, then you could expense them directly. But you do have a limit generally of $2,500 that you have to then capitalize any long-term improvements, be it furniture and fixtures, be it construction costs. But remember, repairs is not something that we could capitalize. Those do have to be expensed right away when you do fix the broken issue.
We'll leave the Q&A button and the Zoom toolbar down there up for the remainder of the time. But Chuck, why don't I have you open up your webcam and mic, and we'll conclude the time here with Jen.
Well, Jen, we sure appreciate the things that you talked about today. Good reminders about some specific points. We would encourage all of you that are watching this webinar to get a hold of Jen to find out how to head off surprise expenses. We have her contact information right here on this slide, so jot this down or take a snippet of it, but we'll remind you of it again later. As another reminder, if you'd like copies of this webinar presentation, it'll be up on our website in the next day or so. Just scan the QR code, supply some info to us, and we'll forward you a copy of the webinar. Thanks again, Jen. For anyone thinking about their expenses right now, the question is, and we always ask this, how much money are you leaving on the table? Most dealerships are overspending on supplies and services by 25% each month. There's about 150 expense category options out there where you can spend money. Most dealers will spend in roughly 100 of those categories. Spend as a percentage of sales equals about 5%. So if you're doing $100 million in sales, that 5% equates to $5 million bucks. 25% of that looks like $1,250,000 on an annual basis, which you have the ability to save with StrategicSource. You know, 95% of the dealerships are decentralized, meaning that they do not have a purchasing department, and the locations are free to select whoever they want. StrategicSource can be that purchasing partner for you. The business problem? Too many categories. Typically, there is not a plan to effectively attack categories. Dealers are short-staffed. You've all experienced that. StrategicSource has a lot of experience in cost reduction analytics. Last year, we completed over 2,300 sourcing projects in the expense categories used specifically by dealerships. Your expense challenges are that dealers are typically overpaying for supplies by 25%. There's a broad scope of categories. There are way too many suppliers to manage, too many supplier invoices that flood your office that have to be processed, and there are too few discounts or rebates that get taken. So the question or the challenge becomes, how do we simplify that? This slide shows that the annual savings opportunity might be for 4 different revenue groups ranging from 60 million to 300 million in annual sales revenue, and what the savings can look like on a monthly basis. I'm going to leave this here just for a second for you to look at, just because remember, the cost savings drop to the bottom line. So it has an important impact on your profitability. There's a lot of dough that's left on the table for you to get back. Just touching base briefly on our expense categories. So here's a listing of 72 categories, regardless of what business you're in. If you're a dealership, a church, a manufacturing company, or a service provider, you're likely to spend money in 72 of these categories. If you're an automotive dealer, there's another 56 categories there. So you can see how that scope of work is quite large, up to 130 to 150 categories, and it can all be pretty overwhelming. If you own your own facility, or even if you're just leasing it, you're probably spending in these 15 facility categories that are here. Our StrategicSource solutions. We have a profit improvement program. We manage the process of conducting a financial analysis of all your spending. We do spend category planning. We source the money-saving solutions for your spend categories. We implement those solutions. We review and perform supplier compliance audits to make sure you're getting exactly what you were told. The problem StrategicSource solves and help you correct is high expenses and a broad supplier category. Another tool is our strategic spend analysis. This is more of a strategic broad look at your expenses. We analyze them, we put them into the correct category buckets, and build a plan for you to execute. Your benefits? You get an organized, prioritized plan and a good staff planning tool, all with the idea that we can help direct you to a 25% savings. Contract tracker. Most dealers have a number of contracts, actually many contracts. Keeping track and keeping current and managing all the terms of those contracts can be a daunting task. SSI's contract tracker gives you contract visibility, advance alerts on expiration dates, and risk mitigation, because you may want to negotiate a lot of points on that contract, including an auto renewal policy that may be in there and some other points that you have had a chance to review and realize that you may want to change. SSI's spend management solutions, or the suite that we have, solves the problems of poor staff training, no contract management, high prices, and weak profits. SSI spend management provides for you a strategic focus, contract tracking, and improved pricing and profits for your dealership. Expense Edge was created from a database of thousands of price comps, and we've been collecting them for 20 years. This is similar to Home Depot. We provide the tools and solutions for you to do the work. We give you the data points to keep your costs down. Spend management learning. We do a lot of training in the areas of spend management. We have trained many folks, and we do many webinars a year in purchasing 101, 102, and 103. Simply put, we can teach your team to do what our team does. Hopefully this has been a helpful presentation today. Again, scan this QR code and we'll get you some information out right away. Thanks again to Jen from Withum for her presentation. Just as a closing note, and we want you all to know that StrategicSource does not take any type of compensation from our suppliers. But we do know that we have vetted them, we know what their work product is, and we know how competitive they can be. We would encourage you to take a deeper look at our supplier offerings. Thanks again for attending today. David?
All right. Thank you, Chuck, and thank you, Jen, and everyone. We're going to bring up a post-session survey. Just 2 short questions. Love to get your feedback on what you thought here. You spent nearly an hour with us. So there you have it. Thanks, everyone, for your time, and we look forward to you joining us on future profit improvement webinar series events with StrategicSource. Have a great rest of the week, everyone.